Well, global energy markets are under severe strain as the Iran conflict continues to disrupt one of the world's most critical oil supply corridors. In fact, in just over a month, hundreds of millions of barrels of crude are estimated to have been pulled from global circulation, which has sent shockwaves through price supply chains and fuel markets as well. From shipping lanes to refineries, the impact is being felt across continents. Take a look at this next report for more.
The crisis began in late February, when conflict involving Iran and regional actors escalated sharply, disrupting key oil-producing and export routes. One of the most critical choke points is the Strait of Hormuz, through which roughly a fifth of global oil supply normally passes. During the conflict, shipping through the region was heavily restricted, effectively choking off global supply lines. According to Reuters and energy data firm Kepler, the world has lost more than 500 million barrels of crude and condensates that would normally have entered the market over the past 50 days. That's one of the largest sudden losses in oil supply in modern history. The impact is not just about numbers. It's about rising fuel price uncertainty, disrupted shipping routes, and a global market struggling to adjust to a massive supply shortfall. To understand the scale, that is roughly 1 month of total US oil consumption, or more than a month of Europe's oil demand, or enough fuel to run global shipping for around 4 months. At the peak of the disruption, Gulf producers lost about 8 million barrels per day of crude output in March alone. That figure is nearly equivalent to the combined production of two of the world's largest oil companies, ExxonMobil and Chevron. Overall, analysts estimate that production outages reached as high as 12 million barrels per day at certain points during the crisis. With supply collapsing, oil prices surged sharply, averaging close to $100 per barrel during the conflict period. That price level helped drive the estimated $50 billion in lost revenues from unproduced crude oil. To put that in perspective, that loss is equivalent roughly to about 1% of Germany's annual GDP, or the entire economy of smaller European nations such as Latvia or Estonia. But experts warn that the impact goes beyond immediate oil production losses. Global onshore crude inventories have fallen by about 45 million barrels, tightening supply even further. Some heavier oil fields in Kuwait and Iraq may take 4 to 5 months just to return to normal output. And damage to refining systems and LNG infrastructure in parts of the Gulf could mean full recovery takes years, not months. There are early signs of stabilization. Iranian officials have said that the Strait of Hormuz is open again, and diplomatic signals suggest a possible path towards de-escalation. Markets have already responded. Oil prices have fallen back below recent highs as traders price in the possibility of restored supply. But analysts caution that even if the conflict eases, rebuilding production and supply chains will be a slow process. So, while oil flows may be restarting, the economic shock from this 50-day disruption is expected to linger. From lost production to strained inventories and damaged infrastructure, the global energy system is still absorbing one of its most severe supply shocks in recent history. And as experts warn, full recovery could take months or even years. Business Bureau, WION World is One.